The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the May 21st terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that just simply empower human potential, because living up to our potential is something that we must master each and every day. So let's begin with an empowering belief or two, or maybe even three out here. How about the first one by Orison Swett Marden? It goes like this: the strong man, the positive man who has a program to carry it out, cuts his way to his goal regardless of difficulties. It is the discouraged man who turns aside and takes a crooked path. Something to think about. How about number two out here by G.E. Poulard? The measure of a man is not determined by his show of outward strength or the volume of his voice or the thunder of his action. It is to be seen rather in terms of the strength of his inner self, in terms of the nature and depth of his commitments, the sincerity of his purpose, and his willingness to continue to grow. That's a beautiful thing. How about we just go ahead and finish this off with a wonderful African proverb out there: He who forgives ends the quarrel. Now think about that one, folks. He who forgives ends the quarrel. Take the thing that is most difficult in your life, something that you haven't forgiven somebody for. It could even be yourself, for goodness sakes, but something that you have not forgiven out there. Go ahead and get rid of that. You will end the quarrel. You will have lifted so much of a burden off of your shoulders. Well, let's go take a look at the burdens of the market. Are they out here? Well, not really. If we take a look at the indexes here right now, it is Tuesday. Tuesdays being up days traditionally for the last several months out here. Right now, no difference. The Dow is up 47 points. The S&P is up 3. The composite's up almost 4. Russell 2000 up a point. Google, though, interestingly enough, is not up. It's back $5. Apple, interestingly enough, it's back $6 out here. Microsoft up 3 ticks. Intel up 13. Cisco down 8 cents to the upside. AutoZone, AZO, I believe they released numbers here finally. They were supposed to do it before the bell, but I saw a delay out there. They generated earnings per share of $17+ a share out there. Net income, $645 million versus $606. Their net sales for 9 months, $6.05 billion versus $5.84. A lot of used cars out on the road, folks. A lot of dangerous used cars out on the road. AutoZone leading the charge to the upside. Then right behind them, you've got the Dust. That is the 300% inverse of the gold the gold out here. That's up 8% here. Then you've got ZSL. That's also the inverse of silver. Let's see, Monroe Muffler. MNRO, I've seen a few of those around. I think they're down here in Florida. They're up 10% this morning. They were out with earnings as well. They're up about $5. MNRO is a ticker symbol. Let's see here. What do they actually generate? All those used cars out on the road. Sales, $732 million versus $686. So no problem beating the top line. Bottom line, looks like maybe they spent a little bit too much. $15.4 million versus $17.4 from the prior year out there. That was on Monroe Muffler. LinkedIn LNKD trying to go up and rescue all of those passengers stranded on its island reversal. It's up about 1.8%, up $3.35. Medtronics, MDT is a ticker symbol. They were out with earnings before the bell. They're up 6% here this morning, up $3 and change. Biogen, BIIB. Will that thing ever go down? That is up another 1% this morning, up $2.39. Charter Communications, CHTR, is their ticker symbol. They're up almost a little over 2% this morning, $2.50. BlackRock Inc., BLK, up $2.22. YRC Worldwide, YRCW, up 9% this morning. Home Depot out with nice numbers. They're up $2. To the downside, Google, Apple leading the charge. Right behind them, Solar City, SCTY out there. I don't know if I would have chosen those as my symbols out there. SCTY. But in any event, they did, and they are down $5 this morning, off 10%. Priceline struggling a bit here this morning. That is the rocket ship of all stocks out in the marketplace, only back about $1.70 right now. Regeneron Pharmaceuticals, that's off $4. That's off 1.5% out here. Formento Economics, FMX, off 3%. Let's see anything large. WellCare Health, WCG, they're off 5% this morning, off $2.77. Tesla Motors, how about that? Off a bit, down $3. 877-927-6648. Give us a call, folks. Let's go start off by taking a look here at our S&P 500 out here. Ooh, if the candle closed like that today, we'd have a little shooting star. Now, that would be interesting. Yesterday, a very dojiest-like candle out here. You know that these for me, dojis at highs have more meanings, or at the resistance levels have more meaning than a doji in the middle of a session or on the down move. That's just my personal view of the doji candle. We can see that price is above that primary trading range of 1650. That's that blue horizontal line going across my screen, and until the S&P gets below that area, the S&P could easily make its trek up to that next level, and that would be 1750. Certainly 1700, that midpoint is open game, and that is unless it gets below 1650 out here. You can see price also above the rising price channel, but so what? No big deal. That's really not a breakout. Price was moving to the upside in any event out here. So the S&P 500 right now trading out at 1666 out here. Not a lot of movement. In fact, none really since yesterday. Let's go take a look at the other indexes. Let's just keep the tour going here. Let's go with the Russell 2000. So we take a look at the Russell 2000. Basically, we can say it is or is about to complete a 1 to 1.618 A to B equals CD pattern to the upside. Now, the Russell did have a confirmed A to B equals CD pattern as its B point, which was the April 30th high, was passed with conviction, with volume. And that was important because it was actually doing that and going against that big downdraft from May 1st that had major volume to the downside. The actual 1,003 number, that would be your completion of your 1 to 1.618 A to B equals CD. So far, yesterday's high was 1,150. Is that close enough for you versus 1,003? It's close enough for me. Now it's all a matter of who's going to show up for work out here. The Russell 2000, we want to pay attention to that because that is one of the weak links out here. If you get it closed today below the open of yesterday, 994.30, you'll have a reversal signal. That would be your bearish engulfing candle. That's on the Russell 2000. Let's go take a look at the Dow. Let's go see what the Big Mama is doing out here. The Dow Jones, let's pull this chart. We can see that is running, or what it did here so far today, what it did yesterday, what it did on Friday was moved into the upper portion of that rising channel, that rising price channel out here. Today getting to a new high, a new all-time high, out at 15,401.17. You know, it's like the Dow says it really wants to get up to 15.5. At 15.5, that's going to be basically your midpoint of your next primary trading range out there on the Dow. Actually, on the daily, looks like that is the top of the primary trading range out here. So the Dow has completed the 1 to 1.618. If we go ahead and use the same swing points, that would be April 19th's low, 14,444. The B point out here would be the April 29th high. That was 14,844. And then a C point moving down to the low of May 1st out there. So 1 to 2 would take you all the way up in that 15.5 level. And until a reversal candle shows up, that's in fact what the Dow wants to do. No bearish candles out here. Yesterday's candle, most certainly not a bearish candle. That's on the Dow. So we've done the S&P, the Russell 2000. Let's go take a look at the old NDX 100. And why do we want to look at that? Well, we've got Apple and Google and Priceline, all three of those to the downside here this morning, with Google leading the charge off $10 right now. As we do take a look at the NDX 100, that is really kind of at mid-stroke here right now. It's above the 1.272 expansion. That level completed at right around 29.85. The next area, the next possible area, is at the 31.17 mark out here. That would be your 1.618 expansion. As we take a look at the NDX as we speak right now, we still don't see a reversal signal out here. You had really kind of a doji-ish style candle yesterday. today a little bit of a spinning top. Small-bodied candles, they do mean that a market is getting tired out here, not necessarily what you would expect to see as an expansion is underway. Nonetheless, until the NDX gets back below, we're going to call it 3,000 here, 3,016 here right now. It's still proving the point that it actually wants to try to move higher. It is absolutely in the overbought territory out here. So far today, just working off a little bit of that overbought condition. That's on the NDX. Let's take a look at what other indexes do we have out here on this little tab of mine. Oh, we've got the SOX. Let's go take a look at the let's take a look at the New York Stock Exchange, because that's really an important one to be paying attention to right now. Trading out at 95.96. Now, New York Stock Exchange, the reason why that's important, because it gives us a larger breadth of the market. And as we take a look at that right now, 95.76 is where it is trading at. So giving us a little bit of a little shooting star candle here this morning. Key today, you'd have a reversal signal, no doubt about it, if you get it closed below yesterday's open, 95.65. That would be the number. But with yesterday's candle being such a small-bodied candle out there, it would be one of those reversal signals where you'd have to say, hey, I want more evidence in the marketplace before I'm going to say that is a reversal signal. And what would that evidence be? Well, I would say one of those pieces of evidence would be going and taking a look at the advanced decline line inside the NYSE. Right now, it is a minus 117 as we speak. Advancers in the NYSE are up 1,321 issues, 1,460 to the downside. If you get a minus 447 out there inside the New York Stock Exchange, that actually, the wider breadth of the market, would be signaling to you that the bears have just taken control of the market. Kind of cool, huh? So watch for that number, and that, again, is 446, 447, anything 440, I would say anything. What you really want, let's just make it easy. 448. 448 and lower on the NYSE, then you would really be having the market breadth telling you that the bears just took control of the marketplace. So that's the one that I think you want to go ahead and pay attention to at the close coming into 4 o'clock today. So that's on our New York Stock Exchange. Let's go take a look at the SOX out here, not the White Sox. Let's go take a look at the SOX index. This is the weekly chart. Let's go put this on a daily basis. Let's go see if we can go hunt for bulls and bears out here. Right now, what we can see is the SOX has been traveling inside. It got back inside that rising price channel. Let me get rid of some of these expansion numbers out here on our chart as we take a look at the SOX. We take a look at yesterday's candle. Again, really more of a doji-style type candle, close to a shooting star. Today's truly would be right now it's a shooting star. But we'll see if the SOX is going to break back down through that rising price channel. It is certainly being tested. Right now, we've got the Dow, and it is Terrific Tuesday. And why am I seeing red on my screen? I thought the markets are supposed to go up on Tuesdays no matter what. Right now, the Dow's up 23. S&P flat. Composite down about 3 points. Russell 2000 off 76. We'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 11 points right now. S&P off a point. NASDAQ off 6. And what I've got up on my chart here, this is really the key for the bullish move in the marketplace. In my opinion, this is the key, and that is, there are some correlations that exist in the marketplace that you can use to your advantage. It helps you to understand these correlations and helps you to understand putting together a trading concept, conviction behind moves, whatever it is that's going to assist you in making decisions just by stepping back and taking a look at outside information. Now, it is always good, always best to really trade the one chart at a time, but there are correlations that exist out there that help you to identify divergences. And one of those correlations with regard to the way that the market moves, this is what my research has found. If you're looking for a currency pair that tracks the markets, the S&P 500, then the currency pair that you want to use is the Euro-Japanese Yen currency pair. That's what we've got on my screen here right now. That's what you're looking at as far as the bars are concerned. The candlesticks, that represents the Euro-Japanese Yen currency pair. The black line on my screen, that happens to be the S&P 500. So the S&P 500, you can see, now, is it going to correlate 100% of the time? No. But does it correlate pretty darn good? Oh, my, it's so good. It's amazing out there. I can't tell you the reasons why. I haven't really spent any time sitting back trying to come up with a theory why, because really all I look for is does it or doesn't it? And if it does, then I keep that correlation and pay attention to it. And now inside the Euro-Jap, now the red line on here happens to be the U.S. dollar index, and it's inverted. So as the red line is moving lower, that means the U.S. dollar index is getting stronger. And that correlation with regard to the S&P 500, that just is not as good of a correlation to the actual S&P 500 as the Euro-Japanese yen is. So use this one to your advantage. Now, what we know about the Euro-Japanese yen is it has formed a 1.272 butterfly. Great Fibonacci expansion numbers at that May 14th high, 132.76. If this market is going to make another leg up, you're going to see that currency pair take out that high, 132.76. Otherwise, right now, all that it's doing is consolidating. It's consolidating sideways. Now, as we know, that's not necessarily, so that's a more bullish thing right now than a bearish thing, because consolidations tend to resolve themselves in the direction that they came from out here. The consolidation, we could say, has really been for about, how many trading sessions? 3, 6, 7, 8 trading sessions here right now, and I would say that consolidation pattern really from May 10th going forward out here. So watch this currency pair, the Euro Japanese yen. You don't have to trade it. You just need to be paying attention to it, because this will help you to better understand if the market is truly going to break out or not. Now, why is that important? Because the U.S. dollar index itself, what that correlates well to, I shared this, we took a look at this during the last hour. What the U.S. dollar index correlates well to is certainly the commodities. And if we go take a look at the U.S. dollar index, I think it's important to go do this again, because here's a couple of tools or techniques that you can use for your trading. And the cool thing is it works on all time frames. So whether you trade on a 10-minute chart or a 5-minute chart or a weekly chart or a daily chart, it doesn't matter. These tools all really work the same here. Now, on the U.S. dollar index, it has made its 100% move of a move. And what we mean by that is just simply by taking a look at these major intersections, these major changes in direction and price. And inside the U.S. dollar index, as I pulled this back, if you're watching us on Tiger TV, maybe you're listening on your radio, your mobile device, thank you so much for doing that. Remember, you can always catch a live stream of this show. Just go to the homepage of TFNN.com. On that right-hand side, you'll see a button, 3 little smartphones. You'll be able to see this show stream live. And in the den, you get to see this in HD. So I really recommend that you do that. And the archive channel 10. Now, 100% move of a move where that major intersection came in, where we saw a major change in price trend on the daily chart. That was July 24th. It made a high, 84.25. Price made its way all the way back here, and it did that on Friday as it got up, and it closed at 84.35. It actually got up to 84.51. That's a 100% move of a move. That's a normal move. Normally a stock, an equity, a commodity does that move. You should expect to see people lighten up their load. Now, depending on when you got in on something, you may or you may not take some of your profits off the table. It's more so a matter of wanting to have the right expectation of what you should expect. Well, in this case here, we saw the U.S. dollar index pull back, in essence, for one day. You would expect to see that as it's in the overbought territory, just simply utilizing that relative strength. But what's important here to understand is we had a 0.786 Gartley. It failed. The U.S. dollar index wants to take that wall. Hey, how about that? I don't know if that's what he said in Few Good Men out there, but Jack Nicholson, 85.79. That is where the U.S. dollar index wants to travel to at a minimum. That's the 1.272 expansion. Where it could travel to is the 1.618 expansion. Now, if we go and we take a look at gold here, we're going to do this. I'm going to pick up on this for you. We'll go again. We're going to take a look at how gold and the U.S. dollar works the same with silver, that correlation that is in place out here. And then we'll take a look at, how about key reversal days like yesterday, like we saw inside gold or silver, and the fact that it's giving it up today. Or when is a bullish engulfing not really a bullish engulfing like we saw yesterday in a number of different equities out here. 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. The Dow just turned slightly positive here, down to 80 cents right now. S&P off about 3 points. And NASDAQ off 7. Russell 2000 off a couple of points. New York Stock Exchange here is down 25, and net declines right now out at 379. So that's going to be something you're going to want to be paying attention to at the end of the day out here. You get a net decline. The number I gave you was 448. 448 or lower. The bears have officially taken control, at least of the breadth of the marketplace out here. So pay attention to that at today's close. Now, gold's trading off $22 right now. Silver's off 48 cents. And what I've got on my screen here is the gold contract, the daily, the continuous contract, the daily for gold. And the black line on it is the U.S. dollar index, and it's inverted. So it shows you where the U.S. dollar, and again, it's directional. Don't be paying attention to where it is on the chart, because obviously you've got gold trading at 1361 and the U.S. dollar index at 80. So the numbers on the right hand side of the screen, it's more a matter of direction. So just pay attention to the direction here, and you can see how closely, not all the time, but how closely the commodities are moving in line, at least gold and silver in line with the U.S. dollar index. Inverted, of course, because in this case here, with the black line moving down, says that the U.S. dollar is getting stronger. Well, if we just took a look at the patterns inside the U.S. dollar index, the evidence supports that the U.S. dollar index wants to move higher. With the correlations that we see, plus 90+% of the time, between what the U.S. dollar index is doing, it just signals to me, just simply logical thinking, maybe it's illogical, that the dollar wants to go higher. That says that we're going to see more pressure inside gold. Now, the red line here, because I took a look at a number of gold stocks yesterday, the GDX, big bullish engulfing candles, some engulfing, weeks worth of candles out there. But you've always got to, the most important thing that you can do in trading, like anything, when your money is on the line, is wait for a second opinion. And a second opinion, that's nothing more than waiting for that very next candle to confirm what it is that you just saw, what just took place in a marketplace, especially with something where you could see a significant bounce. And in gold, I think you could see a very significant bounce if there's one that gets underway here. In fact, gold really needs to go back up and test the horizontal area that it broke through, the consolidation level, which it has not done yet. So I can see big bounces coming out here in the marketplace. But knowing that the U.S. dollar index is got a pattern that says it wants higher price, to me it says that gold actually wants lower price. And the GDX as well travels in the same direction as gold does the majority of the time, as well as taking a look at that U.S. dollar index out here as you take a look at the red line. That's what's on my chart right here. I do pay attention to what goes on inside the COT data. I think it's great information to follow what the big and the small traders are doing out there, and the benefit there is that the big money out here is saying that gold is going to make a significant bottom, and that's a bottom that I want to buy. I think that's a bottom that you should want to buy. I think that holds true the time the actual release takes place out here, but it is really a great way to understand what the big money is doing out here, and the big money is at historic levels. Now, look, you've got gold companies that can sell forward their futures, so that is in here also. But it's historic levels. Historic levels, going back and take a look at the lows put in 2008. We haven't seen the commercials take this level of net short interest. In fact, the lowest level I had recorded since the data was, the data goes back to 2006 out here. The lowest level was that took place was right around here, June 29, 2007, actually, when it got down to a reading of 20.6 out here. So at even lower levels. So the big guys, the big money out here is betting on a bottom to come in. It's why we want to be paying attention to, where is that bottom going to come in. Now, if we take a look at yesterday's candle, just simply go back to the daily chart, just simply from a candlestick standpoint, and you take a look at wanting to have a candle prove itself to you. Yesterday's candle is what's called a piercing candle inside. Well, that's inside gold. And so it's a nice candle formation, very bullish, but when you take a look at combining yesterday and today's candle, in essence, it evaporates. And that's where I'm saying you want to go ahead and get a second opinion, especially something like this that could have a nice big bounce. That's at 1535-ish level. That's the horizontal consolidation level that it broke. So on a bounce in gold, I would expect it to go out there and test that level, try to get back inside there or reject that area. So that's where, you'd have a potentially nice bounce. But no follow-through today. And when I put the U.S. dollar index in place here, taking a look and comparing that to what's going on in the commodity section, it's why I feel the way that I do, or why I think the way that I do. It's not really about a feeling out there. But it does help you to understand what's going on inside the marketplace. And Danny said the COT data is hard to use as a timing tool. It absolutely is. You can't use it as a timing tool. What it's great for is understanding what is the big money and the small money doing out there. The timing tool becomes maybe the correlations of, hey, the U.S. dollar index, has it now gotten to a stage where, it's not going to go ahead and make that 1.272 butterfly pattern. You've got conviction of a reversal to the downside. Or have you seen a bullish candle such as yesterday's have follow through today? Now, the trading session is early. Just because gold is off $20 right now, if this show is, this show's not being replayed. It's Tuesday here. But that means, at 4 o'clock today, 5 o'clock today, we could see a whole different picture out here in gold. But right now, that's not what it's saying. So it's an excellent point that Danny made, that if you use the COT data, it's to be used as a guideline to give you an understanding of what's going on inside the marketplace, really between the smart money, I guess, is one way to take a look at the big money, and maybe the individual traders, the non-reportables, the group that usually stays at the party a little too long. If you've ever thrown a party, you've had some folks maybe stay a little bit longer than they should. And that's, in essence, what the non-reportables will do out there in the marketplace. Let's go up to Greeley, Colorado, to Bobby. Bobby, thanks for calling. Thanks for holding. How are you today? Bobby dropped. Sorry about that. He wanted to take a look at the ALK. Guess I got on my soapbox, maybe just a little bit too much there, but really the importance of that was really to help. My mission is really to help each of you out there, and so even myself, I'm taking a look at all those gold miners yesterday and the nice bounces that they had in there and saying, well, now wait a minute here. We need to see some real follow-through inside the market. But Bobby wanted to take a look at Alaska Air Group out here, so let's go take a look at it anyways, even though he's not on the line, and that is moving down this morning. But let me put the actual stock chart out on my screen, so I don't know if Bobby is long or short this, but we'll take a look at it maybe from both the bullish and the bearish side out here. So let's see what this chart actually shows us here. So Alaska Air has had a nice run up from the lows back here in September of 2012. It was down to $32.77, made a high here recently, May 8th, out at $68. Even Steven, how about that? One of Basil's round number highs. Has a little shooting star candle out here. So we took a look at some shooting stars. Here's one where it works the way that it should. You know, this was not a gap-up shooting star. This was a shooting star session on May the 15th. That is a reversal session that then has that second opinion, that follow-through on the very next session, because this is a bearish engulfing candle. So you have the shooting star reversal, then you get the bearish engulfing. Now you come back and you start taking a look at volumes. Well, here's a problem. This had volume off of those highs after giving you two reversal signals out here, the shooting star and the bearish reversal. Then you got a third one yesterday, volume off of the high. This had 3 million shares to the downside. The very first time that we saw volume off the high, the very first signal was on April 2nd when it did almost 2 million shares to the downside. So that was your first sign of institutional selling. So maybe Bobby's question is, where is this headed to? And where it would be headed to is not that it's going to get beheaded, but where it would head to, likely areas. The very first thing you're going to do on any stock chart is you're going to look for those high volume bars. Well, we took a look at the first high volume bars, and those were really volume off of the highs out here. So that was a negative sign for sure. You had a little bit of a breakout on the bar of April the 16th, but we're down below that level. You had a little bit of a breakout on May the 6th. We're down below that level. So where's the next high volume bar? Well, that next high volume bar on Alaska Air takes you to November 30th, 2012, $43 range. Now, if we take a look at just simply the 200-period exponential moving average and what I have on my screen here, and I love this as a tool. This is a tool you want to, it's not a tool that you can use every day. Well, you can from an intraday chart standpoint. You want to really look for these rainbow convergences is the best thing I can call it, because I've got 4 different colors on my stock chart here. These are the red squiggly lines. We've got black, red, blue, and green. The black line is the 8-period EMA exponential moving average. The red line is the 21-day, the blue, the 50, and the green is the 200-day. When you get these little convergences, like we had back here in this equity back in September, and then you see them break apart, and you get the 8 above the 21, and the 21 above the 50, and the 50 above the 200-day, this is really used as, for the most part, more of a momentum play out here, just to understand the momentum behind a move. Even as this equity here gets into the over-bought to condition back in November of 2012, still when you take a look at those moving average lines, it told you to go ahead and stick with it, that to expect a sideways move in order to work it off. That's what you saw take place here as it moves sideways from November 6th, going off to the right-hand side. Take a look at that RSI. The RSI will work off an overbought or oversold condition by moving sideways or pulling back out here. So here, what we can see is that even when we had the 8-day come down and kiss, because it liked to kiss, it kissed and it made up. That was on the move lower on April 15th and continued to move higher. But now we're seeing really a crossover, and we saw that volume off the highs. That says that also the 200-day exponential moving average, that's probably an area where it will head to. And right now that price level is $49.65. So the range on this is going to be $49.65 to about $43.07, which is that November high out there, that the high volume bar, which, by the way, only has 1.9 million shares. So it's not it's a big wide range, it's a big high volume bar, but not compared to yesterday's volume off of the top. So, Bobby, I hope that helps to answer your question about Alaska Air, ALK, and where she is likely headed to. Oh, of course, I pulled back a little bit further, and this is a nasty thing because your real high volume bar actually is back at June 22nd at a price point of $36.41. So what we do know about Alaska Air is if it doesn't hold 42.26 to 43.07, then that is where we'll actually head to. But use these indicators here, use this whole set as ways to be able to help you with your trading and to answer your questions about being able to read, the message of the market. Now, speaking of reading a message of a market, let's go take a look at AutoZone, because that is in a zone all of itself. This thing here is now, looks like this is broken out to new highs out here. Let's go ahead and take this stock chart and pull this back, and most certainly it has. So you've got AutoZone out here. AZO, by the way, is the ticker symbol. So AutoZone up and, or at least has tried to take out its most recent highs out here. And I'll put that same set of tools on my chart out here. So let's go ahead and let's put that out here. We've got the you can see that little rainbow convergence. Now in this case here, we didn't have that same little tight rainbow convergence that occurred as Alaska Air did. But what we can see is where this gave you, in essence, a momentum move inside AutoZone happened to be the trading session of February 11th. That's where you had the alignment of the 8, greater than the 21, greater than the 50, greater than the 200. Now, knowing that on that trading session and knowing that we had a breakout here on the trading session of February 7th, would you have bought on that day when you had that move higher, or would you have waited for it to come back and test the breakout, which was either going to be the February 7th low, 374.46, that was the breakout session with 1.1 million shares, or it was going to be the bottom of the gap on February 6th, the top of that bar, 370.16. What does this equity do? It pulls back with 646,000 shares, really going against the 1.1, so on less than half of the volume. And then, if you were just waiting for a signal from the bulls, you got it the next trading session. That was when it produced a hammer candle out there. That was February 9th. So that told you that this area here was going to be defended by the bulls out here, and that's in effect, that's what occurred out of that's that black horizontal line. So that was giving you your momentum move inside the marketplace. The real buy was coming back and testing out a breakout area on lighter volume and then getting a confirmation with your bullish candles out here. So when we take a look at what AutoZone is doing right now, we can see the lineup. You've got the 8 above the 21, above the 50, above the 200. And now today, 263,000 shares are going against the high that had 313,000 shares. We've only been trading for an hour and, 18 minutes out here in the marketplace. So AutoZone wants to head to its new zone out here. And where is that going to be? That's a great question. Let's go take a look at this thing. Is certainly not overbought here on the daily chart. If we put this on a longer-term monthly chart, let's see, is there anything here that we can see? And the answer is really absolutely not. And what I mean by that is there's really no A to B equals CD that we can put on the chart that's going to make any sense out here. You can see here, this is the monthly chart we've got, and take a look at the rainbow convergence inside the monthly chart on AutoZone. That took place right here in June of 2001 when it got above that level at a price point of about $33.07. It's at $4.21 right now. So my question to you is, do you think you can maybe use this set of tools to your advantage, maybe today and maybe even into the future out here? Take a look at this on the monthly chart for AutoZone. That's a nice move, isn't it? 877-927-6648. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow is up 3, S&P down 2, composite off 5 right now. Russell down 2, and following this show, it is our man Basil Chapman. Then after Basil, it is Tuesdays. That is wonderful because we've got the Options Hour, a great program out there. Then we've got Daryl Martin from 1 to 2, David White from 2 to 3, and then Andy Hecht, our newest edition, from 3 to 4. He's the warm-up band for today's Tom O'Brien Show from 4 to 6. And, folks, if you do have any TFNN services out there, rush to the homepage of TFNN.com and sign up for some Tiger Dollars. Make 20% on your money. If you're sitting on the fence, you're saying, I think I want to try Steve's newsletter out there. I want to try Basil's newsletter, or I want to go check out that new Art of the Chart software. Then rush over, get some Tiger Dollars. You get 20% bonus on any of your purchases, $500 or more. You're going to get a 5% bonus. That's going to be a contribution to the One Fund, the folks up in Boston. If it's over $1,000, you'll get 10% donated to the One Fund on your behalf, tax deductible. So go ahead and do that, and check out the Art of the Charts, folks. If you're looking for a charting package, you want to understand A to B equals CD patterns. You want to understand Gartley's, butterflies, swing points. How about volume at swing points? I mean, the whole kit and caboodle. It is the Art of the Charts out there. So you can try that. 30 days, absolutely unconditional money-back guarantee. What a incredible software package. My hat's off to David White. My hats have been off to David White for a long, long time. Just an incredible software package. Now, talking about tools out here. We were looking at those rainbow convergences. We looked at it on a monthly chart, on a daily chart. Only makes sense for me to give you an idea of where the markets may be headed to and what to watch for. I gave you the number here on the NYSE with regard to the net declines. Right now, that number's at 415, so we're getting closer and closer to the bears saying, I'm going to take charge, but it's really all about the close out here. But here's the rainbow convergence where they all did line up. You just have to be patient. And that was on May 2nd out here. You can see where they all lined up, and then they began to separate the 8-day above the 21, above the 50, above the 200. Now I'll go ahead and pull back, so that helps you with regard to your momentum moves out here. When we opened up the show, it may have been the Trader's Edge show at 9 o'clock, we were looking at the area where the bears have drawn their lines in the sand. A number of hammer candles or bullish reversal signals. We watched the ES Mini during that 10 to 10:30 session push all the way down into the area where the bulls were defending themselves. You got down to 1660.75, closed at 1662. The bulls really trying to defend that position. If that gives way, and what I mean gives way, you get a close below here of 1659.75. That's the last bearish reversal signal that we've got out here. Well, one, you'll make your way to 1655. That's your 0.618 retracement. That's normal. That's also just below the 200-period exponential moving average out there. And I would imagine as price moves down to that level, we'll see the market get into a oversold area. If it's not oversold by then 1651 would be the area where you'd start to see an oversold bounce. And the real key is going to be when you see a change in direction in this market, are we going to start to see A to B equals CD down patterns? Are we going to start to see expansions of swing points on the way down? But right now you've got the bulls defending, and I'll say successfully defending, the position that was very easy to identify just simply by taking a look at the different candlestick patterns that are out in the marketplace. Again, after the bell today, we've got out with earnings. You're going to have Dell, Hewlett-Packard, Intuit, and NetApp. Folks, it is Terrific Tuesday. You're off to start your day. Have an incredible day. I'll look forward to seeing you tomorrow. Stay tuned. Basil Chapman is up next. And always remember this, folks. The way you do anything is absolutely the way you do everything in life. Become a pioneer of your future. That's a great way to live. Do not be a prisoner of your past. Have a great day, folks. I look forward to seeing you tomorrow.